Welcome to the Swing Trading with Cycles channel. It's July 30th, 2023, and that means the July candle is pretty much over. It's our natural gas update. We're going to start on that monthly chart, bigger picture, and we're also going to cover crude oil and XLE in this, so energy stocks more broadly. We'll try to cram everything in pretty quickly. And so, starting with this monthly chart for natural gas, keep in mind that natural gas rallied for 26 months. So the thing topped out in August 2022, and then the low so far was in, what is this candle? April 2023, and that was month 34. So you have a 26-month rally, and then basically like a 8-month decline, but I mean massive in terms of the actual price decline. And just look at, I mean, just very simply thinking about, like, we rallied from here to here, right? So what is that? $8.60, and then it gave back $8. That's actually pretty extreme, right? Like it's just a huge give back of this rally. That's how you think about these cycles and price action in general, right? It's like, how much of the rally do you hold? The more you hold, the more bullish it is. Holds as a higher low, etc. And so it is very possible that April was the bottom, as I mentioned in previous videos, and that would make this currently month 3. But the actual cycle quote, unquote, count is less important than like the very specific price action here. So again, as I said at the beginning of the video, July candle is basically baked. Unless something crazy happens tomorrow, this is going to close something like this, and we are going to end up with an inside candle to open August. And then it's a question of which side of that does it break? And we'll look to the daily cycle for clues of that. But that's what you expect August to open as, inside the range. So to be clear, that's between 2.793 and 2.484. So somewhere inside here, which side of the range do we break? But again, thinking bigger picture, this is a series of higher lows. And more importantly, this candle is just consolidation inside this big candle from June, the big green candle. It came nowhere near the low. This is consolidation at the higher end, also known as a bull flag. And when you zoom in on the weekly chart, you really start to see it there actually. And we'll get rid of this thing here. So from a weekly perspective, thinking about cycles, it appears that that April low was actually week 24, like a week 24 weekly cycle low. And that's an important concept. Make sure you understand that cycles are nested within each other, right? So any weekly cycle low will occur on a daily cycle low, which is to say, you can't have a weekly cycle low without a daily cycle low, and you can't have a longer term cycle low without a weekly cycle low, which is also a daily cycle low. So all that to say, the potential long term bottom in April was also a weekly cycle low at week 24. And so that puts us here at week 15, which again, we talked about how we were consolidating on the inside month on the monthly chart. It was also an inside week. These 4 candles, it makes sense. These have been the current month, which are just a consolidation inside these candles, which is that June month. That big green candle. Again, this is the multiple time frame analysis. That's critical to understand. But this makes it more clear, the visual, that this looks like a big bull flag. Now, when we look at crude oil especially, you'll see like not every pattern that looks like what it is plays out the way you think it will, right? Like this thing, bull flag, could certainly break down, just like a bear flag could break up, which is what essentially happened for crude oil so far. So this is week 15, and importantly, this is a potential swing high here if we close below 2.616, because this candle here on week 11 marks the high so far. It happened in June, right? And so it is possible that we're actually declining into another weekly cycle low. So this was a really crazy weekly cycle. I mean, man, it topped out on week 4, and then it proceeded to decline for 20 weeks. And you even had this big decline that looked like it was it. And then you had this little rally and it rolled over. Notice it actually never really closed above the 10 period moving average, in this case, the 10-week moving average. That was an important tell in hindsight, and just a general thing that you look for. It's definitely you look at multiple signals for sure, but that was an interesting one, right? Even with this huge explosive rally, it couldn't close above the 10-week moving average, and then you had a big reversal the next week. And so again, this has the appearance of a bull flag. The contours are very clean, right? You want to stay above this cluster of lows. So that's around 2.484 to not sort of violate the bull flag for all intents and purposes. And if we think about the daily chart, we talked about this on Twitter, right? So as I posted on Twitter, we are basically most likely in a new daily cycle. That would make Friday day 30, day 9, excuse me, with the previous daily cycle low being on day 30. The alternative is that Friday was actually day 39, right? So it's a longer daily cycle, and this was just another lower high. The nice thing is that the same way that monthly chart is set up for an inside candle as a next candle, Monday is set up to be an inside candle. It's just going to be a question of which side of the range does it break, just based on the structure of this candle. We're obviously at the close upper end of the range, so that's between 2.685 and 2.564, and this is setting up to be this here a higher low than this, right? So you imagine, thinking structurally here, something like this. If we zoom in, the bull case, of course, right? Something like that. And so the way this daily cycle plays out will tell us what happens with the monthly, right? Because Monday is day 10, and then day 11 is going to be the first day of the August candle. And so now you're thinking about what side of the candle that breaks. That's going to tell you if this becomes a bearish daily cycle, then obviously we're going to break the lower end of the range. If it's a bullish daily cycle, we continue a rally. I mean, it's already day 9, and so we've eaten up a good number of days, and we still need to get back above this high. So that's not amazing, but it really all comes down to the next couple of days. So that's the picture for natural gas. Let's switch over to crude oil. And I talked about this at length. The ceiling has been right around $83. And so we're now coming up against that. We're reapproaching that. Let's just look at the monthly chart first. I think it's very telling. So, June, excuse me, what is this? This would be, okay, so basically June was an inside candle of this big move down, which was really a double bottom of this, right? So really just this is a big box of consolidation. Importantly, we're making a higher high above the high from last month, that just right around $75. But still, it's this zone of congestion we need to get through, that 83-ish area. So that's the monthly chart. If we look at the weekly, and this is crude spot, you can see we are, if you think about this in the context of a weekly cycle, this was a big move down. This was that wick down below $65, and then we just consolidated for 1, 2, 3, 4, 5, 6, 7, 8 weeks of basically chopping inside a really wide, ugly range. And now for the last 4 weeks, we've clearly taken off. I mean, you could see it visually on the chart. These candles are stacked next to each other, and then it goes vertical. So if you count this as your major low, and you kind of ate up all this time period, you'd call this, approximately week 11. Or you could quibble and say, well, no, this is your daily weekly cycle low, and so this is only week 4. Either way, it's the test of this area here. Again, that 83 that tells you if we do get through that, well, okay, now we probably test this cluster here in the $94 range, and then maybe back up to the over 100, back closer to like 120, 130. So the levels become very clear. The alternative is that this is going to hit its head around the 83 level, and turn down, and it'll be very clear that that's happening in real time. And if you look at the daily chart, I posted on Twitter, this appeared to be a daily cycle high in real time. We came down here, we had this little bounce, and then we had this incredibly bearish candle. So it looked like it was playing out perfectly. It's like this was your retest of this daily cycle high, and we were going to continue to drip lower. And then we had this massive reversal pattern here, right? So the next day after this really ugly candle, this ugly bearish candle, we actually did get follow through intraday, which is to say, I mean, think about the structure of this candle. It opened here, right? But then I'll just zoom in, just make sure we can all see what we're talking about. It opened here, and then it actually moved higher. Well, I should say, more importantly, it wicked down below here. So well below this low here and below this 10-week, 10-day moving average. But by the end of the day, it had actually rebounded, and this actually became a little swing low, a little higher low than this. And that because the next day you got follow through, bullish follow through, made a higher high above here, and then the next day made another higher high, next day made another higher high, etc. So that's your reversal. And importantly, once you get above the wick of this candle, which was your bearish signal, like, oh, this is a failed retest of this, that is a good chance that this is going to be retested. And it obviously broke through. And not only did it break through, we actually have another little higher low here that's above this high. So that's actually quite bullish. That bodes well for crude. But again, it has to break through that $83 level to really be believed. And then finally, let's look at XLE really quickly, proxy for energy stocks more broadly. We'll start with the monthly. So similar to, well, this has been more bullish than crude itself for sure. So we have our low that's set from in March. That was at $75 approximately, 75.36 call it. And then we had this little inside month, April, but at the upper end of the range, and then massive downside the next month. So that was May, just a complete wipeout. And in real time, certainly looked like this low was going to be tested and maybe even broken, and we maybe find ourselves down at 65. Since then, what has happened? We've had this nice little rally. So inside candle, June, and then boom. Now we've made a higher high, just like oil itself. Think about that monthly chart from oil, very similar. In this case, it's a higher high above $82.52, which was the high from June. And so clearly, this thing is trying to make a move for this high here, which is 87.69, which then kind of opens you up to, back to, well, actually, this thing still hasn't made an all-time high above that 2014 high. So that actually remains in play. I mean, really, you take a step, as you zoom out here, you see this is just a really big, wide consolidation zone after this big move up. So you suspect maybe this just is a continuation, right? Like, think about this as a sort of halfway point to kind of continue this big move up. Again, you won't have to guess. It'll be pretty clear as we break through levels. But if we think about the daily chart, where are we? Where do we think we are in the daily cycle? So it looks like Friday was probably day 24. Definitely like big downside, like as we talked about from that other candle. If you think about it in real time, this was at one point a big red candle after this very bearish looking candle. So it looked like, okay, especially on day 23, it could easily be your daily cycle high. Now it's fought back. We do need to see bullish follow through, obviously, on Monday, right? Like this is set up for something like this. And that would make this candle a swing low, a higher low than this candle, which is a higher low than this candle, higher low than this candle. So in other words, a nice uptrend on the daily chart. And so that's the setup for XLE. Very likely, or very, very possible that, we are actually, if we look at the weekly chart, where does that put us? Because it's probably kind of mirroring oil, right? And so this was your last kind of significant low, which was a higher low than this. And since that low, you're at 1, 2, 3, 4, 5, 6, 7. So this is week 8. So it's not early in their weekly cycle, in this weekly cycle rally, but it's also not late. It's not like double digits by any means. So that's the lay of the land for natural gas and also crude oil and very broadly energy stocks. Thanks for watching.